All right, guys, here we go again. We're going to take Gareth Soloway's take on the NASDAQ, and then we'll come back and give our thesis on the NASDAQ, where we are, where we think the market's going to go. But again, disclaimer, disclosure, because I don't know who has, seen previous videos when I come out and do the Gareth versus, Crypto Joe, charts and stuff. But anyway, back in the day, I was a member over there. Had part-time jobs, paid for it in the courses, and then also to keep depositing money in my account because when you're starting out, you're having to put money in because you're losing all the time, so on and so forth. But anyway, just to show that you put the time in, really. I mean, I'm no smarter than anybody else, trust me. Just put the time in and be dedicated and just be passionate about it, and you can rise to whatever level you want to until you're at the point you can make the market an ATM machine. But let's go ahead and get Gareth's take here real quick.
So a couple things I want to show you here. If we go to the NASDAQ chart, the NASDAQ from the all-time highs back in 2021, we fell approximately 37%, right? So 37.5%. If we look at the bounce off of the lows, we have gone up right now about 36%. If you look at past big cycle highs, aka the dot-com bubble, there's this kind of tendency for markets to collapse X amount and then bounce that same amount before rolling over back to the downside. So just to show you an example of this, if we go back to the dot-com level, right? Here's your dot-com high on the NASDAQ. It fell from the high of the dot-com pivot point for the first leg down. Remember, this is just the first leg down in the dot-com collapse, 40 to 41%. It bounced 40.25% approximately, right? So again, you can see almost identical bounces. So what that tells me, if we go back to the NASDAQ chart, it tells me that, there might be 1 more percent, 1.5 more percent higher on the NASDAQ, but we're kind of running into the end of the run according to past psychological kind of tendencies for investors to jump long. Now, if you look at the psychological nature of investors right now, extreme bullishness, the greed and fear index is in the major intense greed zone. So you're having this, which is what bigger bear markets do. They lure the bulls back in. And I would just be very, very cautious here, especially after the Federal Reserve came out and said, hey, listen, yeah, we're going to pause, but expect more rate hikes. Then you saw jobless claims today come in, last week 266, which was the highest jump.
Okay, guys, good analysis there. Let's go ahead and put ours on there. And what he was talking about was back in the 2000, .com bubble. And as you can see here, the first leg down that he was referring to, then the bounce back up, we hadn't even hit the 200 yet. We were still way up here, very extended over the 200. And then actually, price had been almost on a parabolic move since 1998, and holding that 20 came up very extended, well above the 20, and then we couldn't make higher highs, okay? And then once we got back under the 20, it was all said and done, which is a totally different scenario than where we are now, okay? We weren't that far from the 200 as compared to, 2000, for example. And where we are now, we're pretty close to the all-time highs, okay? And we put in a little, what they need to mention is that we put in a little double bottom here. Okay, if you're watching the chart, first of all, no market collapses overnight. No market, everybody talks about, well, the market collapsed, the market crashed, all those, real scary terms they use. There's always cracks in the dam. There's always evidence of a pullback before it happens. Okay, we're in this price channel here. We lost it. We started trading under the 20. When you start trading under the 20 on the weekly, that's very bearish or negative. Even in crypto, we'd like to see it up and over the 20. So there's a couple other nuances here, but that's for our Patreon members. But yeah, that was the right in here was I guess the nail in the coffin for the Nasdaq. But as you can see, we're coming back up into that zone. And we're calling for a pullback possibly as early as next week, okay? And the reason being is that we have this gray dash line through here. Our Patreon members know what that is. It's a measured move it has a 90%, yeah, you heard me right, 90% probability of success. If you're coming up from the bottom as being resistance, and then support as you're coming down to it. And then we add to that this little double top area, little high pivot area over here. And the further away you are with double tops, triple tops, in other words, as far as if they're spaced out really far, the stronger they are, believe it or not. Okay, so the closer they are, not that they can't influence price, they generally do, but it's a weaker probability of that happening. And then we have this little uptrend line here. We're in this price channel, and then we're pretty extended above the 20 here. Let me take all this off. As you can see, it's been a little bit actually since March, about the middle of March of this year, since we even touched the 20. And there's not too many guarantees in the stock market, but I'll tell you two of them right now. 100% guaranteed. I'll back it up with a $100,000 bet. Okay, every time the 20 and the 200 come together, they will spread apart. Okay, obviously the 20 is a lagging indicator; it'll follow price, and when they come together, price will fall either one or two things. The price will fall under the 200, and the 20 will follow it far and away from the 200, or price will jump up and over the 20 and the 200 and extend just like the NASDAQ did here, far and away from the 200. Okay, the 20 will rise far and away. Okay, and then the second guarantee here is that price will always come back into the 20. It'll either trade sideways like this and allow the 20 to come up and not be as extended above it as it previously was, or it'll trade sideways and down and actually hit and touch the 20, as you see right here. See, extended back, extended back, extended back, extended back. Okay, but anyway, there's many other little nuances, little tips here to make you an ATM machine in the market. Come check us out on Twitter. Come check out our Patreon members group, and we will see you on the charts.